Conventional loans versus FHA loans. What's the difference? Hey everyone, if you're thinking about buying a home, you probably heard of the different type of loans like conventional and FHA loans. But what's the difference between them? Today, we're going to explain the key difference between conventional loans and FHA loans, and I will give you the top tip at the end, so stick around.
Before we get started, make sure you hit that subscribe button. And if you want more tips on home buying and mortgages, we would love to educate you on these topics and helping you make the best decisions. All right, let's dive in.
What is an FHA loan? FHA loan stands for Federal Housing Administration, and this type of loan is backed by the government. It's been around since the 1930s, and the goal is to make buying a home easier, especially for those that don't have a ton of money to put down.
With an FHA loan, you only need to put down 3.5%, which is pretty low. So if you don't have a lot of savings, this could be a good option. FHA loans are also more flexible when it comes to things like your credit score. So if you've had some bumps in the road financially, like a bankruptcy or foreclosure, FHA loans might still work for you.
What is a conventional loan? These loans aren't backed by the government, but follow certain rules by companies like Fannie Mae or Freddie Mac. One big difference is that conventional loan, you can use it not just to buy your primary home, like your main home, but you also can buy your vacation home or an investment property. So if you're thinking about buying a second home or renting out a property, conventional loans are a good option.
Credit score and why it matters. Here's something important to know. Credit score matters a lot more with conventional loans than it does with FHA loans. With FHA loans, the mortgage insurance cost is the same for everyone, no matter your credit score. But with a conventional loan, your credit score affects both the interest rate and the cost of your mortgage insurance. So if you have a high credit score, you'll likely get a lower interest rate with a conventional loan. But if your credit score isn't that great, you might want to consider an FHA loan because it's more forgiving of lower scores.
How mortgage insurance works. Okay, let's talk about mortgage insurance. Both FHA and conventional loans require it if you put less than 20% down. But how it works is very different. With an FHA loan, you pay the mortgage insurance in two ways. First, there's an upfront mortgage insurance, which is 1.75% of the loan amount that gets added into your loan. Then you have your monthly mortgage insurance, which is 0.5% of the loan amount, which is added when you put less than 5% down payment. Here's the catch. With an FHA loan, no matter the down payment you're putting, mortgage insurance stays for the life of the loan. That means that you'll be paying it until either you pay off the loan or you refinance into a different type of loan.
With a conventional loan, you also have mortgage insurance if you put down less than 20%. But the difference is that the mortgage insurance can eventually go away. Once you've paid off 20% of your home's value, the mortgage insurance will drop off. Plus, with conventional loans, you have options. You can pay the mortgage insurance monthly, finance it into the loan, or even pay it all at once at closing.
Loan limits. How much can I borrow? Another key difference is the loan limits. Every year, the government sets a maximum loan amount for FHA loans. This limit can change depending on where you live. Usually, FHA loan limits are lower than conventional loan limits. On the other hand, conventional loan limits, they let you borrow more money, especially in high-cost areas. That is called jumbo loans, which allows for even higher loan amounts.
So, which loan is best for you? The answer depends on your situation. If you have a lower credit score or less money for down payment, an FHA loan might be better for you. FHA loans are also more flexible if you've gone through some tough financial times like bankruptcy or foreclosure.
On the other hand, if you have a higher credit score and are looking for more options like buying a second home or an investment property, a conventional loan might be the way to go. And remember, with a conventional loan, the mortgage insurance can eventually drop off, which means you could save money in the long term.
Okay, so now for our number one tip. Before choosing between an FHA or conventional loan, check out the down payment assistance programs in your area because many local and state programs offer grants or low-interest loans to help you with your down payment, which could make a conventional loan more affordable. These programs often work in combination with both FHA and conventional loans, giving you more flexibility and potentially lowering your out-of-pocket costs upfront.
Wrapping it up. So there you have it. Now you know the main difference between conventional loans and FHA loans. Both have their pros and cons, and it really depends on your your credit score, down payment, and financial situation. The best thing you can do is talk to an experienced mortgage lender or give us a call so we can guide you through the process and help you choose the best loan for you.
Thanks for watching, and we'll see you next time.